Thank you, Deputy Speaker. I rise to speak on this motion, which is regarding the APRA requirements for smaller banks. And I first start by commending the member for Groom for bringing this motion. The regulation that is proposed can be a bit complex, and so, Deputy Speaker, I'm going to attempt to bring it down to a simpler level. Essentially, the Australian Prudential Regulation Authority, APRA, in November last year announced it was investigating tighter liquidity and capital requirements for smaller, what they call authorised deposit-taking institutions. When they made this announcement, however, APRA did not provide any evidence to justify the change. It seems that APRA had failed to consult with industry and provided no evidence to support the change in policy. So straight away, Deputy Speaker, I think in circumstances where a regulator with the power of APRA is conducting an inquiry and a lack of consultation in that way does start to raise some serious questions. We have a banking sector in Australia that is already subject to considerable prudential regulation, and I think overall it's intelligent in its approach to ensuring the banking sector's resilience to financial market stress. And these were the sort of reasons that have been put forward fairly broadly as for why these changes to liquidity and things are required. And what this is actually about, Deputy Speaker, this is about a power imbalance between our big four banks and our smaller community banks and other mutual societies and organisations. And that it is not good when we are seeing competition eroded between these organisations, and the ones in the end that suffer are, of course, the Australian consumer. So, on our side, Deputy Speaker, we believe very strongly in the powers of the markets, in the powers of entrepreneurial approaches to everything, including the financial sector. And particularly, we believe in competition. And the changes that have been proposed will result in less competition, less access to capital by consumers, and overall higher costs for consumers. And I think we need to first of all look at the very important role that smaller banks, smaller financial organisations play within our community. Because of their very nature, community banks tend to channel most of their loans to the neighbourhoods where their depositors live and work, helping to keep communities vibrant and growing. And we heard the member for Casey talking about the number of those banks and organisations within his electorate that contribute significantly to all of the activities within a local community, and I note in mine particularly with supporting local sport and other local charities. And I think that the community banks have a real presence in the community. One of the biggest complaints that I receive in my office is about bank closures. But community banks, because they do have a physical presence, they have tellers there, they have real people, this provides invaluable assistance to elderly people, people with a disability who may, for example, be unable to access internet banking because of their vision impaired. They may be people with a disability or people who simply do not have internet access, and there are still plenty of those in Australia. So these are the sort of very direct services that these community banks provide, and that should be encouraged. Community banks also provide very important competition, particularly within the housing sector. And at a time when the Bank of Mum and Dad has become the 6th biggest lender in Australia, we're approaching a situation where whether or not you end up owning a home will depend upon the circumstances of your birth, and that there is a role there for these smaller banks to assist, often in circumstances where the larger banks will refuse first home buyers. So, Deputy Speaker, it is extremely important on our side that we maintain the strength and the integrity of these smaller banks. Thank you.
Thank you.